Pick up on the markets now. The JSE looking set to contend with struggling global markets. The rand won back some gains through the unit, which hovered over its weakest level in nearly 4 months amid an elevated greenback and an imminent interest rate hike by the U.S. Federal Reserve. Now, Bianca Botes is Executive Director at Citadel Global. She joins us now for the latest on the market moves. Bianca, good morning to you and thank you for your time. Let's start with the rand, which seems to have regained some strength against the dollar. Talk us through that trade and what sentiments are driving the moves.
Good morning to you and the viewers at home. We saw the rand actually retrace quite significantly following those weak levels that we saw above 1610. And one of the main reasons for this retracement is really the market consolidating and squaring off positions after that significant weakening of the rand ahead of the Fed interest rate decision. Markets are expecting that the Fed will likely hike interest rates, and that has actually caused the rand to weaken quite significantly, coupled with some of the local elements that we have seen in terms of the flooding, load shedding, and it's really just markets taking a breather, saying, you know what, let's take the profits that we've gained out of the weakening rand, take a breather, sit back, wait for the Fed to make this announcement, and then take it further from there.
Yeah, let's talk about the U.S. Central Bank's Federal Open Market Committee. It sounds like a mouthful. They expected to begin a meeting on interest rates later. What can we expect from that decision, and what clues could it give on what the bank may do at the next meeting?
Markets are currently expecting a 50 basis point interest rate hike. However, it will largely depend on exactly what the tone of the Fed is. If they come across a bit more dovish, meaning that they might seem to not be willing to hike rates as quickly as the market anticipated, we can actually expect the rand, for instance, to gain some momentum on the back of that. And on the flip side, if we see the Fed coming through a lot more hawkish, meaning that they're going to increase interest rates a lot quicker than markets anticipated, we will actually see the currency like the rand come under pressure yet again. The main thing that we need to take into consideration here is really the tone and not necessarily the interest rate hike itself.
Yeah.
Because that tone will give us an idea of the risk factors that the Fed is pricing in, where they see inflation going over the medium to longer term, and exactly what their avenue of defense will be against inflation by using interest rate hikes to actually counter it. So it's really important that we keep a very close eye on the tone of the Fed, and then also obviously pricing in the expectations of that interest rate hike. But for now, markets are anticipating a 50 basis point hike.
All right, let's revisit the commodities for a moment. Oil prices, in particular, climbing at the back of the EU, considering the new sanctions against Russia. Talk us through those sentiments, and does that mean that the petrol reprieve that we are experiencing locally will be short-lived if this war does persist?
So what we first need to look at is exactly what is driving this rally in the oil price. Over the past couple of weeks, we've actually seen it exponentially increase on the back of the war in the Ukraine and the supply concerns that we are seeing. However, we have seen the oil price pull back significantly on the back of China's demand actually slowing down because they have been in continuous lockdowns. Now, new data coming out of the U.S. have, however, reignited those supply concerns, showing that their inventories actually dropped lower than expected. So it's really an ongoing monitoring process of the oil price at the moment. However, these sanctions, for the most part, has already been priced into the oil price. Remember, markets tend to react on what we are expecting rather than the actual event. So investors and market participants start pricing in these expected actions prior to it actually happening. When we start looking at the local petrol price, there's two things that we need to take into consideration. Firstly, the value of our currency, so whether the rand is strengthening or weakening. if the rand continues to trade around about the 15 rand 80 mark, or we actually see it gaining a bit more ground and the oil price remains fairly stable, we can expect that with the petrol prices in South Africa to decrease. However, if we see an increase in oil prices as well as a depreciation in the rand, we can definitely anticipate petrol prices to rise in coming months.
Let's conclude the conversation with load shedding, which resumed on Tuesday, much to everyone's unhappiness. This amid further breakdowns in the utilities generating units. Talk us through whether this will further impact the already volatile rand.
I think a very important thing that we need to look at and need to consider is the fact that load shedding is not a new concept in South Africa, and investors have for most part become accustomed to the fact that Eskom has its problems, it has structural difficulties, it has aging infrastructure that continuously breaks down, and I do believe that they are aware that load shedding is going to be with us for the foreseeable future. However, what we need to consider is the impact it's going to have on economic growth, so how often we're having these blackouts, how long the duration of these blackouts are, and whether it's obviously stage 2 or stage 4 load shedding will also have an impact on our production abilities from our manufacturers. So once again, for the most part, it's already been priced into the market. I think, the moment we started getting stage 4 load shedding last week, investors already positioned themselves for the negative effect that load shedding is going to have on the already fragile South African economy.
Bianca Botes, the Executive Director at Citadel Global, thank you very much for that markets update. All right.